Hello and welcome back once again to another price action replay powered by Multi.io. So Thursday's looking good, greens across the board. Could this mean the bull market is back on? Well, the price of Bitcoin has remained relatively flat for September, and the strong decline in altcoin and DeFi token prices seem to be making the situation worse for many investors. Despite this lack of bullish momentum, on-chain data reveals that new participants are joining the Bitcoin network at an alarming rate. And analysts believe that the surge in new participants could partially be attributed to the strong pullback in DeFi tokens and altcoins. In the past 30 days, many have registered double-digit losses, and this may have left investors looking for safer alternatives in the crypto market. While the price of Bitcoin has repeatedly failed to break through the $11,000 level, it has remained stable above $10,000 for the past month. Given the current economic and political chaos sweeping through the US and other countries impacted by the coronavirus pandemic, Bitcoin's price stability strengthens the argument that Bitcoin is a solid store of value. Although the US dollar has remained the most sought after asset in the face of the recent financial crisis, it's possible that a second wave of coronavirus infections may negatively impact the global economy. Such an event would likely prod investors to invest in assets like gold and Bitcoin, especially if the dollar loses strength. Now, how about that TA? Well, Bitcoin has been hovering around the 20-day exponential moving average for the past few days. Although the bulls have tried to break away on September 29th, they could not sustain their higher levels. The bears have not been able to capitalize on the weakness and sink the price below the $10,500 support. This shows indecision amongst the bulls and the bears about the next directional move. The bears have not been able to capitalize on the weakness and sink the price below the $10,500 support. This shows indecision amongst the bulls and the bears about the next directional move. The flat 20-day EMA and the relative strength index near the midpoint suggest a balance between supply and demand. It is difficult to predict the direction of the next breakout from this range. However, sometimes the movement of the RSI can provide some hints. If the RSI rises above the symmetrical triangle and the 55 level, it increases the possibility that the bulls may attempt a breakout of $11,178. If they succeed, the BTC USD pair can rally to $12,000 and then to $12,460. Conversely, if the bears sink the price below $10,500 and the uptrend line, a drop to $9,835 is likely. And how about our mischievous moonshots? Well, up first we have PowerPool, a protocol that aggregates governance tokens from popular DeFi projects like Compound, Aave, and Yearn Finance to accumulate governing power. This allows token holders to have a stronger voice in the direction these projects take and ensures that their interest is heard and not just the interest of large VCs that have a large stake in the protocols. The CVP token is up 50% today and 80% in the last week. The token has only been trading for a little over 30 days and started trading at $3.50 on August 28th. Today the token is trading at $3 on the news of a new product integration. And how about that new integration? Well, the PowerPool team has recently announced the development of the Power Oracle system, a decentralized cross-chain price oracle protocol. The Power Oracle combines the price feeds from Uniswap, time-weighted average prices, and Compound's open price feed to create a new cross-chain price feed. The Power Oracle will be the first to support Ethereum, XDAI, Matic, and Binance Smart Chain blockchains. Up next we have Zilliqa, a high-throughput smart contract blockchain that uses sharding technology that allows transactions to be processed in parallel. Unlike the other smart contract blockchains that came after Ethereum that use a proof-of-stake consensus, Zilliqa is a proof-of-work blockchain. The ZIL token is up 38% in the last 7 days, and the token has had a volatile month, reaching a high of 23 cents on September 1st and then quickly dropping to 13 cents 5 days later. As of 2 days ago, however, a price hike happened where it settled to 19 cents where it is today. With regards to latest developments, Zilliqa has recently announced a non-custodial staking to be released on the mainnet on the 14th of October. This will be a major upgrade to the protocol, which includes new tokenomics that divide the Coinbase rewards allocation from 100% to miners to 60% miners and 40% stakers. The implementation of the staking will lower smart contract extension costs by 4x. Solid. And now, last but not least, for our Buy the Dip shout out, we have Cream, a decentralized money market protocol on the Ethereum blockchain. The project came live during the fork craze in early August and is a direct fork of Compound and now many others too. The Cream token is down 36% in the last 7 days and just over 40% in the last 30 days. The token has been on a downtrend since September 12 after a 125% drop from $260 to $60 just 5 days later. Cream is currently rewarding 2,950 tokens to yield farmers on a daily basis, which is about $162,000 at today's $55 token price. The shift in strategy where farmers dumped all farm tokens immediately has affected Cream especially hard. On September 24th, Cream launched the Cream White Pool. The Cream White Pool is a fork of the popular Curve Protocol's YCRV feature that aggregates stablecoins and provide an automated market making pool that generates fees from trades for their depositors. Cream now includes forks for the following projects: a lending market from Compound, crypto AMM liquidity pools from Uniswap, and stablecoin AMM liquidity pools from Curve. And on that note, thank you very much to everyone for joining me once again for another price action replay powered by Multi. I hope you have a fantastic afternoon, evening. I'll see you again all tomorrow. Take care.